What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house. It's going to be torn down soon. I understand that there are power lines that are just kind of close. What's up again? This is Dan Fredenberg, and that there is a commercial real estate building. All right, and that should get everybody energized and excited. And Calvin, I know about the work you do in pediatrics. Do you prefer doctor or just Calvin, or what do you want?
Cal's fine with me.
Cal, okay, great. And I got some great news for you, Cal. I don't know if you're aware of this, but today we are joined by my very favorite member of the audience. And why is my favorite audience member here? It's because this is a chance encounter where I interview commercial real estate and other real estate players. That means deal sponsors, buyers, sellers, investors, brokers, you name it. And you may ask yourself, why would you want to do that? And the answer is, if you've ever heard of off-market deals, they're the private deals that you're not allowed to publicly discuss, then you should also know that you need documentation of your prior substantive relationship, or else the SEC will get ants in its pants and shut down your business, which is very, very bad. But before we get too excited about real estate, I want to let you know the advantages of joining and watching. One of them is you will learn how to more effectively communicate on the subject of commercial real estate. And more important, you'll understand how my guest fits in. But as I said, before we talk too much about real estate, Cal, do you want to say a thing or two about yourself?
Yeah, my name is Calvin Lowe. I'm a full-time pediatric emergency medicine physician. I'm based out of Southern California. I work in the Children's Hospital Los Angeles emergency department. I'm also co-founder with my wife of Peace Equity, which is a real estate syndication business. We try to help people, especially healthcare professionals, find their journey through passive income streams.
I love it. I love it. So let's share our screen. We're going to talk about the motivations, but first I got to say, but wait, check your eight. Calvin, I don't know if you can do this or not, but maybe you can try to see through your camera into the user's device, because down there might be this hideous subscribe button that, like the youngsters, they'll judge you if you're not subscribed, and that would be terrible. Okay, it's a silly joke, but anyway, the 5 distinct motivations. I've now by this point spoken to literally hundreds of different commercial real estate players, people in the real estate space, and everybody has their own unique reason why they got into this space. And maybe it's the same, maybe it's different from why they're staying in this space. But even though everybody's is unique, I find they fit pretty neatly into these 5 motivations and these 5 categories here. And the reason why it's so important to go through them is because if you're a real estate person, the thing that's going through your mind has got to be, at least partially, what's going to make this person stick around if the going gets tough? Because after all, these deals have plenty of risks involved. They take months to close. They take years to go full cycle. So you need to know what that is. And the first one of which is preservation of purchasing power. What on earth is that? So there's a couple different people who preservation of purchasing power really, it describes them best. Mostly it's people who already have a portfolio of assets, and as a result, they are W-2 or job optional. Sometimes people in this situation, it's that they earn enough beyond what they need to survive and support their families, that they need to find some place to place this capital where they're not just, it's not getting eaten away in the form of inflation and whatnot. But you may ask yourself, if you're in this position where you don't really need to work, why would you even bother making another acquisition? Well, there's a couple scenarios even then. One of them is when inflation's rearing its ugly head, that's going to eat away from the purchasing power of your cash flow, so it's going to be time to make a new acquisition. And then the other one is when you're buying at a super steep discount, like when there's an asset crash or serious distress. Now, of course, you should always try to buy your real estate at the steepest discount possible, but I emphasize it here because the people who are best described by this motivation, they don't have to be buying and buying and buying the way that other people that are more transactionally based will. But that doesn't really describe me. What describes me personally better is trading time directly for wealth. And that is because I come from tech, specifically the CRM and online e-commerce web funnels. So selling millions of dollars worth of revenue each year was my forte. And I helped a bunch of different people in that space before getting into real estate. And the impetus to getting into real estate was watching my previous boss flip 10 houses a month, even for years before he hired me. And then I was going, well, there's got to be a way where I'm accumulating this wealth, but I'm not doing that intermediate step of making high salary, high wage, and giving half of it away to tax. So that's what I'm up to. I know it's very understandable for some people, but less understandable for people who are usually in their 20s or something like that. And there are some people who jump into this space in their 20s. There's others that come on later in life. And what they're really up to is they want to control their schedule. For youngsters, that might mean that they want to hustle like crazy right now so that they can fast track their retirement. Other people, they just want to be able to go to their children's events when they want to. They want to work fewer months per year, fewer weeks per month, or something like that. And so that's why they are interested in real estate. Now, of course, many of the people who have this as a primary motivation, they think it's secretly everybody's motivation. They think, who doesn't want to retire? And the answer is some real estate people. Some real estate people are fueled by ambition. They're after that generational wealth, making sure that their great grandchildren never have to hold a day job. And that's why they're going to hustle into their 90s. Now, of course, this is vilified in some circles, but I think that's a little bit unfair because at the end of the day, if you're providing a service like you do in commercial real estate, you have to take care of the place after all. You have to make sure that people are motivated to not fall asleep at the wheel and keep on working hard to make it a nice place to live or rent or whatever that commercial property is all about. And this is what some people are doing. Now, my last motivation, though, it's another group that is going to hustle into their 90s, but instead of being specifically about their own family or their own generational wealth, these guys here, they've picked a sector of society, or maybe it's the environment or animals, who knows what it is, but they realize that there's a massive financial component to making a big impact on the world. And so that's why they are making their acquisitions. So, Calvin, as far as those 5 different motivations, what combination of them would you say describes you best?
Well, I've been in the medical profession for over 30 years. So I'm to the point now, I do want to probably accelerate my retirement. That's where I've been. I've only been in the real estate world for the last couple of years. And, it's just the grind that I'm going through right now, just day in and day out. I recently just worked 11 shifts in 14 days, and I'm just burnt out. And, I live in Southern California, so with all the traffic's like, right? So I live 30 miles away from the hospital. So in some places that can be a 30-minute drive. For me, it's an average an hour and 15 minimum each way. So that's for me, the motivation is to accelerate my retirement so I can have spend time with my wife and my children or adult children. They're getting married, and who knows, grandkids. I want to be around to do that. I just want to keep working and grinding. Don't get me wrong, I love what I do, but I just want to work when I want to, not when I have to. So that's my motivation.
I love it. I absolutely love it, especially because the next segment that I always go through, it's on the risk assessment, the tolerance for risk assessment. And the previous one was about motivation. So there's risk of seeming starry-eyed, naive, whatever you want to call it. And this one brings it into reality a little bit. And if you've ever been involved in a 506B syndication, those are these private deals that I say you're not allowed to publicly discuss unless you have documentation of your substantive relationships. If you've ever been involved in one of these, the securities attorney involved should have insisted that everybody fills out this super invasive financial questionnaire. And I say the securities attorney, there really should have been one in your passive investments, or else that's a big red flag. But when I got through that questionnaire and I got to the question about tolerance for risk, I found that the question, it lacked utility, specifically because I couldn't think I could use any of the multiple choice answers. So for this format, I made my own one that's a fill in the blank question. It is, there are many popular investment asset classes, but I think blank is too risky. So Calvin, it can be inside real estate, it can be outside real estate. What is too risky for you to invest in?
That's a good question. I'm thinking about, I have friends, actually my own son, they would invest in these fad things like the Supreme, right? Clothing, the branding and things like that. I remember him buying all these different things and, it's just whatever's the present time, right? I remember my friends like, oh, look at this. It's the Supreme pinball machine. I said, seriously? Or the different clothes. I've been to different areas in the world, like Hong Kong, and there's like fake knockoffs and so forth. How can you tell which is right, which is the real thing or not? So I know it's sort of way out there, but that's that things comes to my mind.
No, I love it. I love it because at the end of the day, it's an appreciation move, right? Buy low, sell high, or you just lose. And I know that's a little bit of a bummer to put it that way, but it actually dovetails into the next segment, which is the favorite deal metrics. And the thing that's funny about this is that for the first few hundred chance encounters, I didn't include this slide even though I really wanted to. And the reason why I didn't include it is because I know some people, they're the front of house, the pretty face, the PR, the marketing person. So they're not going to be the type of people who really deep dive into spreadsheets and things like that. Maybe they're fully capable of it, like maybe they're programmers like me, so any type of math isn't scary, especially if you've done electrical engineering. But for anybody in the audience who is only reading and not watching, I think I'll switch over to this layout. There we go. Now you can read it a little bit better and we're a bit bigger. For anybody who's only listening and not watching, I'm going to read all of these. It's not an exhaustive list. And I should mention that the reason why I started sharing these is because even if you are the pretty face, so to speak, you're going to learn a few of these different metrics and you're going to rely on them to emphasize what's the important part about this deal. And that means that if you, yes, you in the audience, come talking to my guest, Calvin, then this way you're speaking the same language as far as the priorities in a deal. Here they are. The first one is cash on cash, then IRR, which is internal rate of return, then there's cost per door, then there's net operating income or NOI, there's the going in cap rate, which is really talking about the difference between the going cap rate in that area for similar properties and the discount you're getting on that cap rate. Then there's the loan interest rate, which is especially important if you're going to be assuming a loan. Then there's the occupancy rate, which is the inverse of the vacancy rate, but it's the same figures that go into it. Then it's the average income where the property is located, followed by the amortization period, which is especially important if you're assuming a loan. Then there's the market versus in-place rent. What's the difference between those two? There's the population growth where the property is located to get some baked in appreciation in the form of demand. There's the sponsor record, which is how many deals have gone full cycle and how many deals are going on right now. There's the waterfall split or exit strategy, which is what happens to your investment after your capital has been returned. Then there's DSCR, which is debt service coverage ratio, which is really about leverage. It has to do with how much of the revenue from rents goes out the door immediately in the form of the loan. Now, once again, that's not an exhaustive list, so Calvin, you're welcome to add one if you don't see it on this list, but if you want to give like a top three or something like that.
Yeah, I think for me, the first one is sponsor record. When you do these big deals or whatnot, it's all about trust and relationships, right? You just have to looking back and see, because when I'm looking for investors, they're trusting me with their funds and so forth. So if I partner with somebody, the general partner or the senior partner, I want to make sure that their record is good. Are they delivering double-digit returns? How long they've been in the business? Since I'm sort of a newbie, I hope to be there that one day where people can say, oh yeah, Calvin's done this or that. Also, living in Southern California, I look for places where people are going, right? Everyone's leaving Southern California or California in general because the taxes, the rents and so forth. So look for areas and markets that are growing, big economic growth where businesses are going. Sports teams are being established there. So a lot of, marketing business type of aspects for that. And also probably, everything's talking about loan interest, right? Because that's a big thing these days, right? So that's going to affect your underwriting, how much your capital has to be raised, and it affects the final outcome in your underwriting and the results at the end.
I love it. I love it. I'm just eating up that answer like a delicious subscribe sandwich. It's very subtle, my little reminders, I know, but it's actually a reminder to bring out the Dan Does Deals Commercial Core Competency Cube with the 6 different roles in a commercial real estate deal. And sure, it leans a little bit more towards the multifamily side of the business than other types of commercial real estate. But the reason why this is so important is because I think it's one of the key tools that will help you more effectively communicate on the subject of commercial real estate and understand how my guest fits into those deals. And if you are watching and you say to yourself, I really need one of those cubes, the great news is it's absolutely free. You go to dandoesdeals.com. There's this great big conspicuous button. You click on it, go straight to the PDF. You can print it out and practice it with your friends, your family, yourself, I guess. And yes, you heard me right. I committed the cardinal sin of marketing. I give away my freebie without even asking for an email address or any kind of contact information. It's terrible. But let's get started. The first person I want to talk about is the repositioner. The repositioner is an acquisitions person. They're the most public facing person of the bunch. They are doing tons of paperwork and looking at lots of different properties. Now, why are they called repositioners? What exactly do they do? Well, they're doing all of this to find upside and find the property that basically has the most meat on the bone. But of course, real estate is the most mature industry out there, arguably. So chances are the real art of the repositioning is figuring out, well, how can they make this property make more money than it is right now? And one of the most peculiar parts of being a repositioner, and many people who they have a real estate business as well as professional certifications such as medicine, they frequently become repositioners. And one of the most peculiar parts of being a repositioner is you need a wide network of financiers. That means you need people who are not going to be involved with the actual property directly. They only deal with the owners, paperwork, and money. So the financiers are super important to repositioners' businesses, just because if they can secure a cheaper loan, that goes straight to the profitability of the building. So that's a key part in every repositioner's business. But of course, the more conventional, the simpler side to understand, the more intuitively obvious part of repositioning is operations. You need to figure out how to stop those Benjamins from going down the toilets. But of course, there's a lot more to operations than just unclogging toilets and collecting rents and mowing lawns and things like that. And if you want to be on a GP team of a commercial real estate property, then you do have to contribute. So you may ask, well, wait a second, it says right here that you're from the internet. How can you contribute? Well, one thing you need to understand is even with the larger properties that I have experience with, the enemy is vacancy. So with larger properties, you're going to be outsourcing to a third-party property management. But what you really need, if the scariest place that the operators can drop the ball, it's definitely with having too high of a vacancy rate. So you're going to need somebody on the GP team with some serious marketing chops to hop in. And then, of course, me personally, I also contribute digital assets as needed. But there's only so much you can do as an operator to find more upside. So the next place that the repositioner looks is to get a contractor team involved to upgrade the property, make it a nicer place so that the next residents will be happy to pay more than the previous ones. But if only it were that simple. You can spend endless amounts of money on contractors. You can gold plate the toilets if that's your thing, but I don't think you're going to get a return on investment. And if you're like me, once again, from the internet, you're going to need locals. You need boots on the ground who can be there in an hour or two, because that won't be me. I'd still be stuck at an airport in an hour or two. So you really need somebody on the team, on the GP team, who can be there on short notice. They keep track that the contractors aren't using subpar materials. They're keeping to schedule. Then there's also the keeping an eye on the operations, making sure they're not sloughing the details, giving old photos, things like that. Now, for the next part, I'm going to do a hypothetical. One of the things that is very frequent among engineers, attorneys, physicians as well, is they tend to buy a rental property or two of themselves, a single family rental. And one of the issues that comes up is they say, oh, well, I know how to buy a house. I put down my deposit and then I borrow the rest. So full of confidence, they turn around to the financiers and say, hey, my friends and I pooled 100K each, and we want to buy that 350 unit apartment complex down the street. It's just tens or maybe even hundreds of millions of dollars. You don't have, I don't know, say tens or hundreds of millions of dollars you want to lend us, do you? Well, the financier is going to have one question that might cause you a bit of problems, and that is they're going to say, who's your sponsor? Who's your KP? What's that all about? See, if you understand where the lenders are coming from, you'll understand why they ask for a sponsor. But if you're in a mentorship program or you have a guru or something like that, I encourage you to listen very carefully. See, the depositors are the ones where your loan is coming from. And so the financiers themselves, the banks and whatnot, they need to make sure you're not going to make the acquisition, run the place into the ground, and then make it so that that principal is unrecoverable. So what they do is they insist that somebody in the fold, the sponsor or KP, has to already own a similar asset. Now, on top of that, you need a certain amount of liquidity to show you can run the business. And then among the ownership team, you need a balance sheet, in other words, collateral, worth at least the amount of the loan. But if you've got all that, you got yourself a commercial real estate deal. So, Calvin, I believe that you have repositioner roles, financier, like financier relations, and then some asset management. If I got that right, or where do you tend to fit in?
Yeah, I think it's a combination of things. Just my hands and sort of thing. As a real estate syndicate, obviously part of the financial thing to develop the trust. Some of the deals that I've done, part as a GP, is investor relations. My wife is a graphic designer, so we help do with the updated newsletters, again, just to be transparent with the investors what we're doing with their money. And we also sit on the asset management team as well. So it's just really cool to sit down with the person who's operations, boots on the ground, and make the decisions on the day-to-day operations. Meet weekly or bi-weekly, and just to continue to be active in that role, so that my investors know what we're doing, where their money is going, and good or bad news, got to let them know. Be transparent the whole time. It's all about trust and relationships.
I love that, especially you say that your wife's a graphic designer. It's like that means she could probably put the Supreme logo on anything. It'd be a lot cheaper, but that's great. Let's talk about the buy box though. So when real estate people are talking to each other, they're saying, "Hey, what you looking for? What's your buy box?" We're really mainly asking about three things in particular. First one's geography. Where is it? Which state? Which county? Even which neighborhood come into play before they really call it ideal. So that geography is going to matter. Second one's size. When you talk about size in multifamily, we go by the number of apartment units. And the reason why the size is so relevant is because the type of company that's going to take over 10 and 15 unit apartment complexes are going to be fundamentally different from the ones that are focusing on 150, 350, and so on. So that size matters. Now, of course, there are other forms of commercial real estate that go off of, say, square footage or acreage, but that size component still remains the same in its relevance. Now, the third one is usually called class. I prefer the term desirability because class is two completely separate things all bundled into one. And those are the condition and the area. If you're talking about the condition, that's how old is the facility, the building, all that sort of thing. What kind of condition is that building in? Is it all beat up, or is it recently renovated and pretty nice? And then as far as luxuries and amenities, what do those look like? So that's the condition. But if you're talking about the area, since we're talking about residential here, the school districts where the property is located is going to be relevant, but all types of real estate depend on the crime rate where the property is located. And then there's that old trope of saying location, 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 when what I think brokers really mean is traffic, traffic, traffic. If a gazillion people pass by that property every single day, it's going to be more valuable or more desirable than a place where it's basically crickets. But both the area and the condition are ranked the same way as in grade school, where you have A plus at the top, and then A, and then A minus, and then B plus, and so on. So, Calvin, as far as you and your organization goes, what do you guys focus on?
Yeah, we've been investing in Phoenix and in Tucson, Arizona. Right now, currently, we're expanding out to Salt Lake City. Great place, big economic growth. Like I said, they just got a new NHL hockey team franchise that's coming there. So lots of jobs, lots of growth. It's a great place to visit. They have the ski areas. The Olympics have been there. So, and it's like, I think it's one of the youngest workforces there too. So they're like in the mid 30s. So a lot of stuff that's going out that way. So really excited about Salt Lake City.
I love it. So then let's talk about people. It's my favorite part about commercial real estate. It's because it's so multifaceted. People tend to be really eager to make new introductions or referrals, even if they're not going to be on the team. Now, even though people are so eager to help each other out, we all have our own unique skill sets. So we're still going to be better suited helping some people more than others. I work with a company that focuses on financiers and financier relations, and everybody in real estate really is in the business of deploying capital. But with my marketing background, my online, these podcasts and things like that, the sponsors and KPs, they usually have enough going on where somebody like me can make a big enough difference. And so those are the people who I tend to try to attract. But Calvin, I don't know if you have any 506B deals. Don't go mentioning those at the same time as mentioning investors. But if you are 506C, go ahead. But who's in the audience that you can help most?
Yeah, anybody who's doing it for the first time, right? I do a lot of 506. All my deals so far in this journey have been 506B deals. See people who never done this, and have a lot of people who like, wow, what's going on with this? So a lot of family and friends who may not be accredited investors. The hope is one day they'll become accredited investors. My son invested in our deal. He's an accountant, and was really just validates why we're in this business. And he, of course, he saved up. I don't know where'd you get that money from, right? It was from me. But he looked at the deal. He said, "Wow, this is really worth it." So, and when he funded it, I said, "Wow, okay, this is your first step of becoming an accredited investor." So that's a great start for me. It's home.
Yeah, I absolutely love that. That's fantastic. And so let's talk about how to reach out then. Me, I got this very big, distinct last name. So it makes me really easy to find online, especially on LinkedIn, where I spend most of my social media time, as does Calvin. But I should also mention that if you like business skill building related subjects and you search me up on Amazon, you can see that I have a few different books for sale. You can check that out. But if you are going to be raising capital, if you do have some sort of business that you're going to be trying to attract investors for, I highly encourage you to pause the video. You can scan the QR codes that you see. It's the same one twice. You can scan the code, and that brings you to the FAQs page of 506BME, which is the platform where we offer the backups and maintenance of the investor documentation. So if you drop your laptop in the bathtub, you will still have proof of your substantive relations that you can show the SEC, and that's important because nobody wants to get shut down. But Calvin, as I mentioned, I know you're active in LinkedIn. What are the best ways to reach out in the context of real estate?
Yeah, LinkedIn, I've been very active in. Also, I have Instagram and Facebook pages. My company's called Peace Equity. It's spelled PEACEQUITY. It has special meaning for me because the first four letters of Peace Equity, it stands for the first names of my family: Peggy, Elizabeth, Austin, and Calvin. So it's all about family, generational wealth, and just peace of mind from there.
I love it. I love it. And that brings me to the last part, which is the public service announcement. You'll have to excuse me because I'm not actually a physician. But if you've been watching this episode and you've been experiencing searing pains in your eyeballs, like migraine-like symptoms, I'm confident it's due to the downright hideous subscribe button that I guess you clearly haven't clicked yet. And it's totally free. Full disclosure, the reason why I want people to click on it is because if enough people do, then YouTube will actually start to pay for these videos. instead of me. I think that would be amazing. And the trade-off to you, just so you know, is my videos may show up on your list of suggestions. You can feel free to ignore those suggestions because, quite frankly, I just appreciate the fact that you spent this time with me. Just like Calvin, I appreciate you joining me. This has been great.
Hey, thanks, Dan. Thanks for having me.
Awesome. Thanks. Hey there. Are you interested in commercial real estate deals? Would you like to build your network of investors and deal sponsors? Well, the best thing I can do for you is have you appear on a chance encounter interview as featured on dandoesdeals.com. You may know me from 506B or as a top commercial real estate voice on LinkedIn. And if I had to think of the top factors in your success in commercial real estate, my top two would be your network and your ability to effectively explain how deals work with effective communication. The 15-minute chance encounter format, it checks both of those boxes, and they ensure that you can share your private deals with me without the SEC calling it a public solicitation. So hop onto LinkedIn. You can see my name is over here, Dan Friedenberg, and search for my name. And the best way to reach me and book that is to message me through LinkedIn. And don't worry, it doesn't matter if you decided to enter this space just last week or 2 weeks ago, or if it was decades ago. It'll be fun and easy to look good. We're just asking multiple choice questions based on your core competencies you look to contribute, your level of sophistication, all that kind of stuff. So I hope to hear from you soon. 506B me. Bye. Any syndicators, make sure you 506B me.
Hi.
Oh, hey, yeah, here's my code. You got your QR code scanner? Okay, yeah, oh yeah, just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506BME?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, you can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506BME, everybody.